What's up, guys? It's your boy Fish and Pips here, and we're back with another post-market analysis here for the week. As promised, pure clean cut showing every trade taken for the week, losses, wins, missed opportunities, and it's here for you guys, and we're here to change the game because a lot of people aren't showing their losses, and a lot of people have told me, looking at your page or looking at other people's pages, it looks like you guys don't lose, right? And let's be honest, we only want to post our winning trades because it looks the best. But I'm here just to show that, hey, the only way the market moves is if people are losing. I don't care how good you are, you're on the losing end of a stick sometimes, right? Majority of the time you are on the losing end of the stick. But without further ado, let's get straight into it. First and foremost, we've had, let me see, 2, 4. This right here is one continuous trade. So that's 5, 7 trades, 2 break evens, and 1, 2, 3, 4 losses, right? So overall, 4 losses, 1 win, 2 break even trades for the week. And we're going to go over those right now. So just to show you guys how you can do a little backtesting, trick, if you guys don't know, you can go right on your MT4. I was going to use TradingView, but the times are a little bit messed up as far as like seeing where you got in. So yeah, you go to TradingView, bottom left corner, you open your account history, and you just customize for your week, and it brings up your week, right? So here's all the trades that were taken for the week. As you can see, even with 4 losses and 1 win, we still managed to profit up $16. Obviously, if the losses were minimized, we would have been up. Overall in the account, we're good. We're up 10% for the month so far, so I can't complain. My fault, not 10%. Scratch that, 2%. Goal every week is at least $250. That's 2% of the account every week, and hopefully 10% a month. And obviously, if you know what that structure really forms around, that is the FTMO challenge, right? 10%, 1 month, and obviously 10% daily max loss limit. So let's get straight into it, right? First one, February 16th. That was a Tuesday. We took a GBP USD sell at a one lot, so a standard lot. That was during London session. We took a sell. Stop loss was about, let's see, 7 pips. So stop loss was right up here. Take profit was 30 pips. Now clearly we got stopped out. Reasoning for why I took this trade was really just based on basic market structure, right? If we drag market structure out, this is the most recent higher low. Higher low was broken, and it was just a matter of waiting for a retest. Which I hopped on it. We rejected off the 70 Fibonacci level, and price just kept pushing up. So really, it was a matter of maybe I could have caught another re-entry up here, but at this point, it's past my trading hours. I'm not going to stay up to really chase the trade, especially after a loss. So that was one trade missed. Well, a trade that was lost. So then we pop another GBP USD sell at a standard lot. This was a 1 pip win really, so break even technically. And this is right into New York. Now, I really took the sell because I thought we were going to be in trend continuation. If we look at H1 relative to where we were in the sell, granted this isn't a complete marked up chart, but this was at a price imbalance level on the weekly chart. So I guess the problem that I've been having, and a lot of people have been having who use this strategy, is knowing when exactly the tipping point is going to come, right? I've been talking about this huge GBP meltdown it's really since January. Having the Fibonacci up on the weekly, being that we're in the key fib levels, we're at a price gap. on the weekly chart, just really trying to see or get a gauge of when it's going to happen. Now, if we're looking at the H1 and where that sell came in New York, right, structure really broke on the H1, right? This was our last higher low. Jeez. Sorry for the crooked lines. This was our last higher low. We failed to make a higher high. We made now a lower low. This would be the lower high. So obviously, I caught the wrong end of this trade in a sense, just not being focused on where we were. And then if we go back down to the 5 minute where the trade was taken, so the trade was taken here in New York. Zoom in. Now you could see obviously I was in profit. Stop loss was moved to break even. Actually, I closed this trade manually. We were in profit about. You guys are gonna be mad. 21 pips. Actually, I got out of this trade prematurely. I didn't even let this whole thing go. I would have closed at 20 pips, or let it run, obviously. But this is where I entered, and this was cool about MT4 because it shows you where you entered with this red arrow. I entered at this engulfing. Division 1 VIP Confluence there for the entry. And yeah, pretty much I let the candle psychology kind of fool me. Saw price was coming back up, and I was like, we took one loss in London. This is kind of an overextended market in the sense that we've been selling since London. I'm not really going to risk a loss. In this case, it would have been a successful trade, right? This is our stop loss. This red line up here, this was a stop loss. Just closed too early. So I guess the lesson learned with that trade is don't close your trades early, accept the risk, and move on. If you lose, you lose, right? At the end of the day, it's not like I took 4 trades in London and lost, right? It's only 1 trade. But it is what it is, right? So that was a break even. We come to February 17th. We take a GBP USD buy. Now, as you can see, this was a 0.50 lap. So I essentially, after the 2 losses I took the day before, I cut the risk in half. So instead of a full 1%, I was using 5%. So we took a GBP USD buy here, pre New York session. I honestly couldn't tell you why. Actually, I can tell you why I took the buy. So I was anticipating the London down, New York reversal type thing. Just marking out, okay, where was the last lower high, right? So this was the last lower high here, right here. We broke the lower high, waiting for a retest. Now in this case, I got kind of a late entry on this, so the entry wasn't even good if I was looking for a buy anyways. You see we rejected the 62 Fibonacci, and we started to take off. We even had an engulfing, but what price ended up doing was respecting something up here. VIP Confluence, and continued selling during New York. Let's see actually where this trade was relative to the H1. So I would say every day up until Thursday, I was stuck on the 5 minute chart. That was my biggest flaw this week, was being stuck on the 5 minute chart, even the minute chart, trying to get an entry. Because I mean, clearly we were in this pullback here on the H1. We were in a downtrend, right? We've already identified that we broke the lower high here. The higher low for this uptrend, right? We've retested the trend line. Structure kept going down. So there's really no reason to take buys going into New York session. Let's go back to that. Right, this was that retest. So here we were, right? London, divergent, pat 3 short. Yeah, pat 3. Sorry, I don't really focus on London patterns. But pat 3 short, divergence, London sell, New York continuation. We even get a pullback little opportunity. Could have took the fib from here to here, and we smack it straight at the 62. We get a bearish engulfing candle. You take the entry after the engulfing. this would have been the real prime entry with trend. Enter here, stop loss here, 18 pips for 40. So, it's not really too bad. Then the same day we actually take another GBP USD buy, 0.50 lot again, even later. And I think what happened here was if we go to the 1 minute chart, this is probably where I got screwed up. So this was the 17th during New York session. New York session here. Yeah, honestly, no reason for the buy whatsoever. I honestly can't tell you why I even bought that. And again, that's why doing this type of thing every week is good, because you see the mistakes that you're making day in and day out, and you take those notes, right? So the first thing I would tell myself, especially after this week, is, Josh, listen, you can't get stuck on the 5 minute chart or lower time frame chart in general, because on the H1 we were clearly in a downtrend at this point. Structure broke at this point on Tuesday. You know what I mean? Everything else up until that point should have been sells to go with trend. Don't go against trend unless structure breaks otherwise, right? In this case, it never did. So that's the first thing I would tell myself, and that's probably the most important takeaway so far. And obviously understanding, right? This buy was really for no reason. I couldn't even tell you why I bought there, especially after seeing this. Especially after seeing this. Like, what's going on? No true reason to buy. But still, we live and we learn. We have another week. We're still profitable. It's whatever. So now this was the trade that made up for it all. We go into, and you can see it was still a 0.50 lot. It was these three here, these three buys. It was a 0.50 lot. But all I was doing is it was 1 to 3 and 1 to 6. I was taking partials, and then about like 4:30, we were up like 65 pips, and I closed the whole position. Reason being that news is coming out that day later in New York session, and it's not really something I want to get caught up in. But yeah, without further ado, let's go into that trade. That was this day here. So this was a rather later trade in the day. Let's give ourselves some more space. Let's see. So here. Actually, let's use this one to capture the whole move. So you can see where I closed and where the trade ended up going. I'm honestly sick, but nonetheless, it was a good trade. Reason for this trade was an entry on the minute. If we look at the minute chart, you can see, okay, where was the last lower high? That was here. Last lower high was here. We broke the lower high. We have a fib, and I also used the VIP Confluence for this entry right off of the, zoom in here. Right off of the 62, and it was pretty much a zero drawdown. Now overall, and the reason why I took this trade is, let's break it down from H4, right? So H4, we had this. Now, structure on the H1 did show that it broke. And this is why it's so important to look at damn near every time frame. Except for the month and weekly, unless you're really looking for like a swing play. But the 4 hour H1, key for structure. And the 15, I would say, really key once you get your entry. After that, anything lower, you shouldn't be looking at that for structure points. You know what I mean? Unless it's an entry. But okay, so H1, we broke structure, right? That's shown here. Cool. Higher low broken. Now we're in a little downtrend. But if you look at H4, look how the picture switched, right? If I remove this trend line, really what happens is, if we start it from the bottom, right? Higher low, higher high, higher low, higher high, higher low, higher high. This is what we were expecting, right? Now you're probably saying, Josh, how did you know with H1 breaking and structure, how did you know H4 was going to continue? You really don't know, right? I mean, the best thing you can do is this, and wait to see where you see some resistance. Now, if we look at this, right? Okay, higher high, draw the fib for the pullback. We reject right off the 62. We start getting some rejection. We can drag this structure point out, kind of use it as a support zone. Boom. Okay, now let's go to H1. What did H1 look like? H1, we see what? We start divergence. To that structure point, right? You guys see that? We start divergence, and we get a double bottom. Let me remove these arrows. And we get a double bottom. Do you guys see that? A W, right? Everything about sells, obviously, yeah, the market could have kept selling. We don't know, right? But stacking confluences, right? H4 structure never broke, and we're still in an uptrend, right? So that means buys overall. 2, on the H1, okay, we're divergent, and we made a double bottom. That's 3. 4 would pretty much be where's your entry, right? So would I have really gotten in or looking or have looked for an entry? Let's go to where it was, right? Yeah, so I got in here, right? Now, if structure, granted we were on the minute, never broke here, right? This last higher low, this last lower high, sorry. And let's make this a different color. Let's make it yellow. If this last lower high, higher low, never got broken, we would have never taken this trade. Realistically, just me at this entry, right? Now, there were various different entries that could have been taken using the fib, right? Pretty much on any pullback that you saw. This one tags 62. This one here tags the 62. So it really gave 3 entries if that one was missed. And if this initial sniper entry wasn't taken, obviously I would have waited for another opportunity, being that we weren't even in London session yet. This trade was taken at like 2:30. Yeah, 2:33 in the morning. But yeah, without further ado, let's go into our next trade, and that was taken today. I'll be honest, today was pointless reason for trading. And it's one of those things where, like, I told myself going into today, really, especially after yesterday where I recuperated completely all of the losses that were taken throughout the week. We were profitable, we were good. What reason was there to really even trade today? And on top of that, there was no real setup to take the trade at all. So here we go. GBP USD sell in New York session. I missed London, and we'll go over London after this because it was the same thing as yesterday in a sense. So we take a sell up here, right? I guess I saw the double top. That's cool. Another thing, I was stuck on the minute chart. So let's go to the minute chart. A lot of you guys probably think I'm crazy for even trading on the minute chart. But, okay. Let's look. Last real like structure made here on the minute. We get that break, and then I was just waiting for a retest. That's all it was. Here, too early of a trade. Too early of a trade. Just a little bit too early. Granted, it wasn't a lot. 21 pips. You know what I mean? Instead, we took and this is the .50 lot. Everything after the two initial losses that I took on Monday were half a risk. 4 pip stop. You know what I mean? Had I put my stop where it really should have been, previous structure, or even at the top of the wick, 8 pips. You know what I mean? That's still a good risk reward ratio. So yeah, that was a trade that was missed. Now let's go to, then I took a AUD USD trade. In my mind, right, we had dollar news coming out, which came out, I think, positive. Dollar was bullish, right? We respected this price imbalance here. We came off of it. Cool. I was expecting bullishness out of dollar. So in my mind, I was like, okay, I already took a GBP USD loss on the sell, and it looks like it really wants to sell. So let me get AUD USD, because that was showing some promising sell opportunity. It was a lot cleaner in my opinion. So here we go. And this another one was one that I was chopping up on the minute chart. Here. I think the most I had on this trade was 6 pips. And then I put it at break even. Because I was like, I'm not gonna sit here all day for a trade. But let's look at it, right? So this was our entry. Obviously you can see this black line here. Let's make it yellow just to carry on with theme, right? This is our last point of structure in which it did break and fib. Let's get rid of these. See? Broke right off the 70. And yeah, little unfortunate. Entered the trade here. So it's a little early. I saw the 3 wicks at the 62. I was like, cool. Stop loss was up here initially. What was it? It's about a 4 pip stop. And then once we were in profit about 6 pips, I put it at break even. And you can see it stopped me out here. If we go to the 5-minute chart, that was a dub trade anyways. It didn't work out at all. But yeah, overall today, just 1 loss, 1 break even. Not too bad. Closed the week out on profit is $16. Not really what I was looking for. Still happy that, we still ended profitable, not a losing week. And we met the weekly goal overall, right, of 2%, to make that 10% return within the month. So right now we're still on good track, right? Obviously you just have to wait for cleaner setups, look at overall higher time frame structure, and seeing what's going on in terms of gauging a trade on the lower time frame, right? Because I can't look for one thing on the lower time frame and the higher time frame tells me something different. All right, that's something everyone has to be aware of, right? You cannot expect a lower time frame trade if the higher time frame is telling you something different at all. It's not going to work, especially if you're a trader that likes to hold trades. Like me in particular, I really like to take trades at like highs and lows and kind of just get the full ride out of it. But that's why it's key to look at the higher time frame first to see kind of where is it setting up, right? How's it setting up? And if we look at just the 15-minute or H1 of where that initial entry was for this trade, this winning trade here on Thursday, I mean, it was at the wick of the H1. We closed up here, right? And this trade actually ended up going for 187 pips. Talk about a week to close, right? Would have really been up. But it is what it is, because now we're, now at another good spot that I like to see. This is a weekly high from like way back, all the way down here, back in 2018. And yeah, also we're at the 88 fib. If you look at that. So what I did for this higher time frame setup essentially was took a fib from the high to low, right? We even have a double top here, so this can act as a strong zone. Price imbalance here that's currently being filled, and the previous weekly and a weekly high from 2018 that we are approaching, and we have rejected, and we're divergent. So talk about a good opportunity for next week, right? Now, obviously, what I'd be looking for in terms of GU for next week would obviously be to wait for this structure to break here. Sorry, guys. I don't know why MT4, like the lines, it's not really drawing friendly or like markup friendly, I guess you can say. But obviously, we'd be waiting for this higher low to get broken. Now, if we just frame this real quick so I can draw for you guys, what I'd be looking for is this to get broken, some type of break, retest, and respect these highs. Now, you guys should know kind of what that makes. Head and shoulders, right? We got the head here. We can draw eyes, face. We got the left shoulder and potential right shoulder. How would I take this trade? Is essentially place a fib from the high to low, look for my key points, and take it down. That's what I'd be looking for in terms of the market for next week. Obviously, waiting for that to happen, not forcing it to happen. That is a key thing. AUD/USD, it's still kind of doing its thing. And yeah, honestly, my main focus has always been for about 6 months now is GBP/USD, right? Kind of added the other ones for fun. I don't look at gold at all. I know it's here, but yeah, GBP/USD, main focus. You guys seen the setup. You've seen the opportunities or trades that were taken. Let's actually look at London real quick to see the opportunity that was missed here, right? So just from a 5-minute perspective, I hope you guys are catching the flow of the things I'm kind of asking myself before every trade, right? Where's the last lower high going into London, right? Or you actually here, last high or low. Sorry, I keep getting confused. It's like I know what I mean, but when it comes out the mouth, yeah. So in London, right, break a market structure. If you were up a little earlier, if you were a night owl, this would be the last market structure. We break that market structure. We pull the fib out from bottom to top. We get a perfect rejection off the 79, and this trade ends up screaming for 60 pips. Same exact setup from yesterday's London session, right? Now, if you missed that, right? Okay, remember, this was the original entry here. If you missed that, okay, what was our next high or low? Here, right? Do you guys see that? This one. We break that. Okay, fib from low to high. Take it from here. I do wick to wick. That's me personally. We reject off the 79. We get an engulfing. You can even enter after the engulfing. If you don't like to enter on wicks, stop loss here, 16 pips for 46 pips. Still good risk reward in my eyes. But yeah, those were the opportunities that were missing in London. And we'll get those over and over again. Because really, the base of my strategy and something that Tyler has taught me is market structure. Once you know market structure, it's pretty much game over. Because, I mean, you follow it, you know when it breaks, you know the opportunities that you can get. And once you have a trend set and you know that market structure is continuing, you can just pretty much use the fib and rip it every pullback you get. And that's how you can really scale up for, your growth accounts. But that's not something I like to do personally. I like to get one entry, possibly two, and let it ride. That's just me. But yeah, guys, I kept this short. We're about 30 minutes in. That was the post weekly analysis for the market. Yeah, make sure you guys make sure you guys subscribe, turn your post notifications on so you know every time that I stream. Also, make sure you guys leave some comments just to give me some feedback on how this stuff is. If you like it, suggestions, pairs you'd like me to look at, thoughts. And yeah, make sure you guys check the link in the descriptions. In the description box, there's links to both academies that I was in, GLFX and Division One Trading. That's what I'm currently in. Top-notch quality, good content, great mentors, That's pretty much how I've learned everything that I learned. And yeah, also make sure you go follow me on Instagram, Fish4Pips. Thank you guys. See you on Monday.